Stocks are down, crypto's down, everything seems to be going down the hole. Can you really make money during scary times like now when we're basically in a recession? The answer is yes. What's going on, guys? My name is Freddie Finance and I'm a licensed financial advisor who holds a Series 7, Series 66 SIE, which is Securities Industries Essentials, and Florida 215, which is life and health insurance. I used to work for Vanguard, who fired me over TikTok for compliance reasons, but now I do social media full time to help everyday people like you get better with their personal finances and be able to make financial decisions on your own confidently. And in this video, I'll be showing you guys the strategies that I implemented for my clients during the tough times in COVID and how you can apply them to your portfolio today. I'll be going over what economic sectors we would be putting our clients in place when I was an advisor and why, what types of investments I would put my clients in during recessionary times, and how you can capitalize on opportunities when most people are running away or selling. So if you'd like to learn how to manage your money from a financial advisor, basically having a financial advisor for free, be sure to hit that like and subscribe button. So it's important to understand that a recession is defined as a sustained period of weak or negative real GDP growth. That means that our economy is producing less than it did before over a consistent period of time. Right now, the U.S. economy is threatening on the borderline of a recession, and this is not what we want to see. But this is usually accompanied by high unemployment rates, high inflation, and a lot of uncertainty, which is exactly what's going on right now. I mean, you really know we are in uncertain times when you go on CNBC or Fox Business, and even the experts have no idea what's going on. They are all basically saying they're sitting on the sidelines and watching what happens in the market before making a move. But don't worry if you're not a professional trader or a professional in finance, but you have to keep in mind that during recessions, making money doesn't happen overnight or even in a few weeks or months. In fact, it could take almost 1 to 2 years to really see substantial gains from your investments. But that's fine, because investing is a marathon, not a sprint. You should be in it for the long haul, and in investing, that's at least 3 to a 5-year outlook. And this market downturn has been a rude awakening for many investors because they have only seen incredible gains since March of 2020 and been seeing so through meme stocks with no fundamentals. And if you've studied any sort of finance in schooling or post-grad, you know that you should not invest in any company that has bad fundamentals, which these meme stocks all have. One of the biggest sleeper problems from the COVID pandemic in terms of investing was that all the new investors were seeing consistent large gains from stocks in the likes of 30 to 40%. And that's just not sustainable in long-term investing. Usually it's annualized in the 9 to 11% range. So where retail investors make the biggest mistakes is when they panic sell in times like this. When the market is soaring, it's easy to forget that it can go down just as easily as it went up. But economic slowdowns tend to be cyclical, which means that things like this have happened before, and they're going to happen again in the future in some form. Whether we will be in tough times for a long time or not, it's important to prepare for its end because that will come eventually. In this way, you won't be joining the panicking stampede of other retail investors getting back into the market because they didn't watch this video and they panic sold their stocks. Have you ever heard of the term FOMO? Well, it stands for fear of missing out, and usually that happens when you panic sell in times like this and try to get back in when the market turns around. So in terms of stock investing during recessions, you're going to want to look to core your stocks. Even though the rest of the economy is on shaky ground, there are still going to be certain sectors that continue to forge ahead and outperform the market as a whole with steady returns. So if you want to protect yourself during a recession with stocks, look at investing in healthcare companies such as Pfizer or J&J. People will always be spending money on medical care because people are always going to get sick and need to get healthier. So another sector I actually like to look for in times like this are alcohol and tobacco companies such as Constellation Brands or Altria, because during these times people like to get away and are going to want to buy their drinks and get their cigarettes to forget about what's really going on. Other sectors that typically perform well are utilities and consumer goods, because people are always going to need to be buying household items. They're going to be spending money on food, electricity, regardless of the state of the economy. And as a result, these stocks tend to perform better during busts like times like this and then underperform during booms. So these are good short to midterm plays, which is around 12 to 18 months. Another stock strategy that we would do for our clients is to focus on adding reliable dividend-paying stocks. Investing in dividend stocks can be a great way to generate passive income over time. When you're comparing dividend stocks, some experts say it's best to look for companies that have a low debt-to-equity ratio and strong balance sheets. And if you don't know how to read financial statements, that's totally fine. I put a link in the description on where to find companies that have consistently paid increasing dividends over the past 50 years. Keep in mind that making solid passive income from dividend-paying stocks takes a large holding of that particular stock, but it doesn't hurt to start adding those types of stocks to your portfolio early on. An option that is almost always never a bad option is to consider investing in real estate. The 2008 housing market collapse was a living nightmare for homeowners. But it also turned out to be a fire sale for some real estate investors, because when a recession hits, home values usually drop. But this time around, it's been a little different because of the big money printing the Fed did, which was around $20 trillion back in 2020. While it was great back then because money was being pumped into the economy and literally anybody and everybody was making money, but now we're starting to see the long-term effects. And in particular with the real estate market, because of the Fed printing so much money, now rates to borrow for a mortgage are rising because there's just so much more money in the economy. It's just basic supply and demand. And the housing prices haven't really dropped much at all. If you don't have enough money for a down payment or can't qualify for a loan, you can still invest in real estate through REITs, which are pretty much index funds that are invested in real estate only. If you want to learn more about REITs and one of the REITs I placed my clients in when I was an advisor, I put a link to their website in my description. Another tried and true option that we always do for our clients in terms of recessionary times is precious metals. Precious metals like gold or silver tend to perform well during market or economic slowdowns because they're a safe haven for old investors. You can invest in precious metals in a few different ways. The most straightforward route is buying coins, bars, or chains, but with where technology is going, it's actually a very smart investment because these days, certain precious metals are needed to make computers and things that we use electricity on. But if you're looking to buy precious metals in the same way that you buy stocks, they also have ETFs of precious metals in almost every brokerage out there. And the best way to capitalize on this type of opportunity, which is a recession, is to invest in yourself. This is the best time to really dive into what you're passionate about and where you can capitalize on the best business opportunities. If you just lost your job or you got a significant pay cut because of the tough times, this is a perfect opportunity to start learning a new skill so then you can add to that income or make more of it and then do something on your own. Some of the biggest companies like Microsoft and Uber came from recessions because those people that founded the companies had an idea, saw a problem in the world, and acted on it, because this is the perfect time to really see what's wrong with the world and how you can bring an idea or a product to light and then solve that problem that's going on. The bottom line is, if you're investing for the long term, recession shouldn't worry you because you know this is part of the cycle of history. And if you want to take a load off, which is taking some profits off the table, that's totally fine too. But for the most part, your strategy should not be to be selling when prices are low. Don't they say buy low, sell high? And if you're looking to make some investments, look to those core sector stocks and add to the big Fortune 500 companies that you know and love, like Apple, Tesla, Amazon. Those will always be great investments no matter what the price they are. But right now, they're on fire sale. All right, I hope this video gave you guys some more clarity on how to navigate your investing through recessionary times and hopefully gave you some inspiration to invest in yourself and learn a new skill. See you guys next time.